G'day gang, Simo and Ed, back for another episode of the Fastline Track Growth Show.
There we go.
Where we talk all things karting and business. Woo-hoo. So, what are we going to do today on our 31st episode?
Blimey. They've flown by, haven't they?
Yeah.
31. Well, our 31st episode is going to be on planning. It's really bloody important, but so few people have even a plan in their business. Yeah, and even if they do, you go, have you got a plan? They go, oh yeah. You go, great, can I have a look at it? And then they'll reach into like the bottom of some desk, pull it out, there's dust, and you're like, let's have a look. 2010.
It's written on a stone tablet.
That's right, yeah. There's a Polaroids and stuff on it.
Yeah. Yeah. I mean, I went for many years not planning.
Yeah.
And then as soon as I did, the game changed.
It is a massive game changer in business, isn't it?
Absolutely.
There's a couple of key things along the way. You get those nailed down, oh boy, it just gets brilliant. But I understand why they don't do it. It took me a long time to get planning into my business. Where do you start?
Well, that's it. It's not like it's something they teach at school.
Well, no, and also...
Even a business school.
Yeah, well, even like so, even if you do like business, they go, you got to have like a plan, and they get you doing your little break evens and stuff. It's understanding the relevance to it, but also when you've got nothing to model it on, you don't understand, you've not got that feel for your plan. It's really hard to get something that's workable, and then you start to do stuff. We know no plan survives first contact. It's just the truth. So all of a sudden you got this plan, and then it's not relevant to the business. And so how do you make it relevant? How does it get practical? And that's why I think so many business owners will just give up. But it really is something you need to persevere with, get used to. You'll start to understand how you plan and understand your own business. It really does give you greater control, doesn't it? Really, really quickly.
Yeah. And you won't get it right first time.
No plan survives first contact.
Yeah, well that's
Forget about your plan being right or wrong. You know what I mean? It just gives you that yardstick so that you know whether you're behind where you hoped you'd be or ahead of where you wanted to be.
Just having one. We go back to the old aircraft analogy. Yeah. Having one, you know where you're going, so you can just alter your course every now and then, and so you keep going for the same thing.
Well, that's it, and faster as well, so you're not waiting, I don't know, depends if you're doing management accounts. There's another thing that people don't do often enough because they don't understand why they should be doing it. But let's just say you're going to do something usually annually. Your accountant's going to tell you something. It's never at the year end, is it? It's always a few months after year end. So your real-time data is like 14, 15, 16 months old. And you're like, we should have done something differently. Well, if you keep doing that for a few years, crikey, you'd be a long way off course. If you can just keep altering your course as you're going, it puts you so much farther ahead of where you thought you'd be, puts you much further ahead of where your competition is as well. So,
yeah. Well, by doing monthly accounts, you get 12 shots at altering course. You just do annual accounts. Well, it's too late.
Useless, aren't they? They're so historic. You might as well just forget about it. Start again.
If you break it down further into a scorecard, which we're going to talk about at the spectacular.
Excellent.
You can have up to 52 chances each year to adjust that tiller.
Yeah, I'm a huge fan of anybody who knows me for any amount of time. Fortnightly planning is what I normally work on. And there's loads of reasons why. It'd be too long for this video today. If you're intrigued why fortnightly, not weekly, then drop a line.
That's a video for another time. Anyway, we digress. So, what's the starting point?
Well, so the first thing for planning, I would always guide and suggest set up some quality time. So uninterrupted time for thinking. I used to have a client years ago, Darren, if you're watching this, hi Darren. He was really good at this. He used to take himself off to a hotel. He'd got a wife, a couple of kids, successful business, and he literally used to book a really, really posh hotel. His wife would go, where are you going? I'm going to the really posh spa hotel. All right, when are we going there? There is no we in this. It's me. I need to go and plan my business. And he used to just isolate himself for, wasn't long, 3 or 4 days. But in that 3 or 4 days, he got so much thinking time, it just crystallised everything that would happen in the year ahead for the business.
No, absolutely perfect. And the best time to do this is probably around October, November. And for the karting business, or for any multi-activity centre or family entertainment centre, is probably in the Northern Hemisphere. It's probably just after that half term. Mm-hmm. They've got a bit of breathing space.
Yeah.
Sit down, lock yourself away. Going and doing it at a hotel is a great thing to do.
Well, that's right. I think, but you also hit on a really important point about the calendar, the timing of when you do that. Too many people start planning in January.
Yeah.
Well, they start planning while they're having a bit of turkey or whatever and having a few beers over Christmas, thinking that is quality time. And there's loads of emotional energy flying around, loads of distractions. You're sitting there, your body's trying to detox, and you think you're going to get quality planning out of that. Well, A, that's not going to happen. And then secondly, once you've got this amazing plan, you come back after that break, and then you've got to sell the idea to everybody who works with you. It's just a complete nightmare. Far better you get your planning done before Christmas, New Year, and then that way you can get the team on board, get them thinking about what's going to happen next year, and let them think about that and ponder about it while they're having a bit of a break, hopefully over Christmas. I know kart track owners, it might be a busy time for you, but at least they're going to find some time to have a think about what it really means in the coming year.
Yeah. Point number 2.
Yeah.
This is a crucial point, isn't it? It's
massive.
It's like, what do you want? What do you want out of your business as a business owner? This is a really big difference. You know, when you sit down there and go, right, okay, and list them all down, right? Well, you know, you might want a housekeeper, you might want this car, you might want a holiday here, you might want to go out to a fancy restaurant once a month.
Yep.
You might want to send your kids to private school. You might want to go and learn to paint with watercolours.
Well, yeah.
Whatever you want to do, list it down.
The classics I find around this are cars they want to drive. This is all quite materialistic, the deeper stuff, but let's keep it on a nice light level for today. But on the materialism side, it's what car they drive. Lots of people identify with the car they drive. I don't, but they do, so that's really cool. But there's usually, when you sit down with people, you go, if you just had all the money in the world, what holiday destination would you like to go to with like the family or on your own or whatever? And most people will go, I've always wanted to go to insert name of holiday. And you're like, you're a business owner. Go and make that happen this year. The look you get sometimes is a bit sort of incredulous. It's like, well, no, what I do is I have a business and then hopefully make some profits, and then I have a chat with the accountant 14, 15, 16 months later, and then they tell me how much I can take out my dividends. It's like, no. Get into some proper reporting, get your plan together, and make it happen.
Yeah.
So, what do you want for your business?
Yeah, it's a very smart thing to do.
Well, if you don't do it, the business dictates where you go. But if you force the business to go and deliver what you're looking for, then suddenly the tail's not wagging the dog.
This is the start to finding out that end goal.
Yeah.
You know, so it's very important.
A huge place to start.
Step 3.
So, as part of your planning then, and just thinking about what's going to go into your plan, the first place I would always start is revisit your customer. I don't mean physically. I mean, like, think about who your avatar is, who's your ideal customer. Get it down to 1 or maybe 2 characters that will typify the person that you want to come and enjoy karting, that you know will have the money and the time to go and deliver the sorts of experience you want to deliver to them, and then hopefully free up enough profits to go and give you that lifestyle that you're looking for.
That avatar could actually, there could be several of them, because if you've got different target markets, so let's take, corporate customers, you've got one avatar, right? Your regular punters that you want to be coming back time and time again during the year, that's another avatar.
Yeah.
Right.
Children,
another one. Stag groups, another one.
Yeah.
Break your market down and understand that one person. We always like to talk about when we write content, whether it be emails, sales letters, social media posts. We always like to have that one person in our mind, and we talk to them.
Yeah.
And that's how we write our content, isn't it?
Always. I've got several clients. I've always got an idea of who their customers are. We spend a long time talking about it. Sometimes it exasperates some business owners I work with, but the power in it is huge. So once you understand your customer, then you understand who they are, and then your content and all the other bits and pieces in your marketing and what you need to deliver to them becomes more apparent, because you know what you've got to say, you know what they're looking for, you know that's going to start dictating the experience they get, so the messages they get from the business are really appealing to them.
I mean, yesterday, because we know our market and we've set this up for ourselves, you banged out 4 emails for me, didn't you?
Oh, crikey, I was in the flow. But yeah, what did it take? Like 12, 13 minutes?
I was being interrupted by the crew.
Yeah.
And you had 10 minutes yourself, and I'm sitting up there planning out the campaign. And I put the first one down. I'm thinking, right, what's the next one? Yes, this one. Then the third one. That one. Yeah, first one done.
That's right. You said one line though, and that got me thinking. I went, that's what your customer is all about. So that's easy. So I just wrote a quick email, and then before you'd finish planning what order everything could go in, I'd done it.
Yeah. And the second part of this
Yeah.
is, what's your USP?
Yeah, you got to have a unique selling point.
Yeah. What differentiates you
Yeah.
from every other go-kart track, or every other restaurant, or every other bowling centre, cinema, insert whatever you spend your discretionary income on?
Yeah.
What's going to differentiate you from that? And it's got to be around the experience.
Probably. There could be other USPs, but ideally, you're just looking for something that you really understand. Not that you understand it, that you can communicate it to your audience.
And it's got to be important to your audience.
Yeah.
Yeah. You know, there's no point in having, like for example, Fastline having the fastest delivery service if the customer doesn't care.
That's right.
How fast he gets his parts or whatever.
Yeah.
That might be a unique selling proposition, but it doesn't mean anything to the customer. So
right.
Who gives a hoot? So fastest kart, longest track isn't going to cut it with the corporates.
It doesn't cut it with anyone other than go-kart track owners. I mean, like that, I've said it, it's on camera. Leave this bit in if we do any editing. It doesn't work for anybody other than the go-kart track owner. You may get the one client, you're going to hold them up and go, they came because it was the longest track or whatever, but nobody cares.
No.
I want to know if there's adrenaline, I want to know if there's memories, I want to know the bumps, the scares, the highlights. I want to go and have banter with my friends.
How many overtaking points there are.
That's right. This is what I want. I don't care. Like, I don't even care if you've got a 50cc kart. Does that mean I can beat my mate down this back straight and just like have bragging rights for for a couple of months till we come down again? That's what I'm all about.
50cc's is quite low.
Yeah, exactly. So that's what I'm saying. Give me a 50cc car, and you give me that promise of a better experience. I'll take it over a 270, a 390. Because I'm not looking for. I don't care. I've got a more powerful car in the car park.
You've got no understanding of the real speed you're doing in a go-kart.
That's
because
right.
you're 6 inches off the ground.
Yeah.
And it feels like
100 miles an hour anyway.
And you'd be lucky if you're doing 30.
Yeah, exactly.
You know?
So I'm not bothered
Maybe
if it's
40.
I'm not bothered if it's a 50cc engine. Just give me an experience where I can just go and have a banter with my mates and really just go and wind them up. Then I beat them on. I don't care. Give me a 20cc. Give me a hairdryer. if it moves and I can beat my friend on it, we'll have a go. That'd be fun.
Cool. The fourth point.
Yeah. We're going to need some measurements along the way. We've already talked about potentially using financial figures is a great one. So what are your milestone points? What's your KPIs? What are you measuring against?
Yeah.
So there'll be a few of these.
The important one is you work out what you want to take out of the business.
Yeah.
All right. So that's the figure you want to hit after tax.
Yeah, net.
Net.
As we call it. I don't know if that's the same all around the globe. I'm assuming it is, but we get taxed in the UK on corporation tax, and then we get taxed again when we go and take some money out.
Yeah. So you want to work out that figure, and then you work it backwards.
Yeah.
You go, okay, so if I want £100,000 out of the business, how do I take that out the most tax efficient way? Now your tax accountant can help you with that because I ain't no tax accountant.
Yeah, well, I'd do it slightly differently, but you're right in one respect. Like, say, let's say it's 100,000 and you want to take that out of the business this year. I'd just work out on a fairly broad brush what I need to go and turn over revenue-wise to go and generate 100,000, and then I'll go and make that happen. Now, at some point, I'll get the accountants along and go, hey, am I being tax efficient here? I've got all these receipts. This is what I did in the business. This is what I'm up to. Here's the shoebox of receipts. It's not quite like that these days. It used to be. Can you just let me know how much tax I need to pay? I've got a rough idea, but make it better for me.
So you work that back, and then you've got your two types of costs. You've got your overheads, which are fairly much fixed. Your rent, your rates, your electricity, all that sort of stuff. Then you've got your variable ones, which is your labour. And I guess the third one is cost of goods. I forgot that. So you've got three. And you just work out an average cost of goods.
Yeah.
So, you want to have an average margin. You work out your monthly fixed costs, and then you work out your monthly wages.
Yeah, your fixed and even your cost of goods is fairly static normally, isn't it? So you've got a rough idea.
Yeah.
It's your variables, isn't it, that can catch you out and quite easily, can't it?
Yeah. Well, work that on a monthly basis.
Yeah.
And play around with the revenue figure.
Yeah.
So you know what you want to get out at the bottom. If you need to add in more labour, add in more labour to it and adjust the figures. Once you've got the revenue, the really smart way to do it is to know how many leads you've got to generate to get a sale.
Yeah. Well, you've got to work out how many customers will generate that revenue. And then from there, it's really cool if you've got an idea. Let's assume your marketing funnels are in place and you've got an idea of how many leads that takes to go and generate your customers. And if you take it back another step, well, we'll talk about that in a second. But I think that the deeper you can get into that planning, the more it gives you a lot of comfort, really. Or perhaps that was just me, but I'm just thinking of a really specific moment when I first worked this out and I realised actually this looks achievable. And that equally, if I look at something good, it looks achievable for us to get this number of customers into the company that I've got at the time. I suddenly moved our revenue target up and then explained to everybody who worked for me why this was an achievable target.
Well, that's exactly it. I mean, the target that we sat down and set for us was sort of, if you look at that target in isolation, you go, you're fucking having a laugh.
Well, we did, didn't we? We had that conversation. That was the exact thing we said at the beginning of the year.
And then we broke it down, because you've got to know your average customer value. Now, we've talked about that before. One of our earlier videos was about average customer value and lifetime value.
Yeah.
You know your average customer value, and you can very easily work out how many customers.
That's
and then, we worked it back to how many calls we had to make.
Yeah, okay, that's interesting. That's a good measure.
And that's like leads.
Well, it's a great KPI, isn't it? It's just something very simple to understand that the team can get behind, or not.
So I roughly know how many phone calls we've got to make to generate the monthly revenue I want.
That's right.
And it's sort of like that figure over here, the annual figure, that looked very scary compared to where we are now.
Yeah.
Right? It was sort of like, oh, really? That's all we're going to do to get that? Oh, we can do that. Maybe add another maybe we're going to have to add another couple of salespeople along the way to achieve that. But it's achievable.
Yeah, the interesting thing about sales is if you've got some big scary figures and you want to go and add, I don't know, let's pluck a figure out. Well, let's use the 100,000 figure. To add £100,000 revenue onto a business, actually, when you boil it down to the 52 weeks of a year, it's a couple of thousand a week. If you've got, I don't know what cart track ride will cost, let's say it's 50. So it's $50 or £50, you want a couple of £1,000. Right, suddenly it starts to get simpler again. It's 40 people. If you've got 4 big selling days of you, it's 10 extra people a day. And then all of a sudden, if you've got like a 12-hour day at the track, it's not even one extra person an hour. And this is how your planning really starts to take shape and power, because all of a sudden you've got this baseline already in place and it's just one extra person an hour. You suddenly realise that we've got an extra £100,000, 100,000 a year on our revenue figure, and that's working on a 4-day week. So all of a sudden everything starts to become more achievable and manageable, and you've got an idea how you get there. You can relay it to the team. It just all starts to take shape so much better.
So what are the typical KPIs we ought to be looking at?
Oh, blimey, it will change for different businesses,
Yeah.
but trackside, I'll be looking at a few different bits and pieces. Bums on seats. I would be looking at average spends. I'll be looking at food and drinks, how many people are buying them. That's the area I'll be looking at. Rebookings. It's going to be one area that I'll show interest in. Now, for the business owner, there'll be lots. We're just starting to rattle them off now.
But you need to keep that. You need to keep that number small.
Yeah, exactly. For the business owner and for the track owner, keep that like nice and long, but make sure you're not overwhelming any one employee with lots of figures.
No,
got to keep that small for them.
But to focus and adjust that rudder.
Yeah.
Right. If you've got 100 KPIs, it's just confusion. But if you can narrow that down to maybe 7, that are the key drivers of your business.
Yeah, which are the 4 or 5 that will make the needle move the most.
And just focus on those. You can look at the others in different areas, fine, you know.
And some areas you might be able to just delegate that.
Yeah.
You just say, right, you're the person that sees them as they're coming off the track, and we've identified this is a great time to get them to rebook. So your task now this year is a really simple one. You've just got to make sure that every hour at the 3 or 4 races we're running, you just get one extra person we would normally get to book and to rebook.
Yeah.
Nice and simple. Let me tell you how we're going to do that.
Yeah.
And that'd be a great little KPI to go measure.
That is probably a good point to call an end to this week's video.
Excellent.
And we'll save another 4 points for next week.
Excellent. It's almost like we've planned this.
Almost.
4 more, such a lame joke, isn't it? 4 more pointers for the next video to talk about planning. It's one of your game changers, so I hope you tune in for the next one too.
Absolutely. And if you want to get your hands on a scorecard that we're talking about, well, you've got to head on down to Dortmund in January to the Fastline Karting Spectacular, where we're going to have a scorecard that we're going to give to each.
Yeah, it's a great event. So we've already run one of these before. It was hugely successful. It's a game changer for your business. So you really are going to come away with stuff that is going to just put money onto the bottom line. It's going to build revenues and build tracks. So it's all shaping up to be a great day. You need to be in Dortmund in Germany in January.
Absolutely. And it's goodbye from me.
Cheerio from me.
And we'll see you next week.
See you in a bit.